Hello and welcome to Crux Investor. We caught up earlier today with Geoff Atkins. He's the MD at Vital Metals, an ASX rare earths developer, soon to be producer. We talked through their plans to get into production within the next 12 months, an offtake with a Norwegian processor, and how they're going to insert themselves into the rare earths ecosystem of North America. If you want our thoughts and opinions on the conversation, accompany the MD, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of companies and commodities. We've got training courses on there to help you with your diligence process. We've got summaries of other interviews that we've done just to save you some time. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, and safe environment, free from trolling, abuse, or judgment, you can join them at cruxinvestor.com/club. Hope you find that a nice experience if you do go there. And we'd love your feedback too, so do give us a like, we appreciate it. Leave your thoughts below. We'll get back to everyone. And if you want to see what we talked about today, do take a look in the description below. Geoff, how are you doing, sir?
Very well, thanks. How about yourself?
Not too bad, not too bad. So where in the world are you?
I'm currently sitting here in Sydney, in Australia. It's beautiful summer weather.
Yes, I hear. But hopefully not too much time for the beach. All hard work, I expect.
Lots of hard work, but it's a good time to be here.
Very good, very good. We are delighted to be talking about your story. I think there's a lot of interest in rare earths at the moment. Generalists coming in, trying to understand what it is. It sounds very, very complicated. So we'll get into that in a second. But first of all, why don't you kick off, give us that 1 minute overview of your business, and I'll pick it up with some questions after that.
Okay, so Vital Metals, we are currently developing the Nechalacho rare earth project up in Canada. We are about to mobilise our mining fleet to commence mining within the next month or so, with full first production in 2021 to be the first rare earth miner in Canada.
Right, fantastic. Now, you spent most of last year at around 25 million market cap. Since August, market's gone a little bit nuts, and appreciating the story you're telling. So I'm interested in your story and understanding what you're trying to achieve there. Should we start off with a little bit about the team? Who are you guys?
So basically, the majority of the team has come out of Lynas. My background is Lynas. The senior management team is Lynas, and our entire team has come out of operating rare earth companies. So really what we're doing with Vital is we're looking to apply all the lessons that we've learned through developing and operating rare earth mines and operations, and putting that into practice for Vital Metals.
So what sort of roles were you performing within Lynas?
So my role at Lynas was, I had two functions there. The first one was around project development. So that is getting the Mount Weld project and Malaysian projects up and running. And then also, and perhaps more importantly for my current role, was looking at the strategic direction of Lynas and looking at what opportunities there were around the world with other deposits to perhaps partner with or secure sources of feedstock for the plant in Malaysia.
Okay, and who you supported by? What sort of roles were they performing in? And at what stage was this? What was Lynas when you were there?
So I joined in 2007. So this was before we'd started any construction activities. But at that point, we were trying to understand what we wanted Lynas to look like in 5 years, 10 years' time. And this was the time when you had a lot of projects popping up around the world. And my role there was really trying to understand which ones we felt actually had the potential to actually get into operation, and that we should really keep an eye on.
Right. Okay. That's Shirley, right? That
is Shirley the cat. Okay. Insists on joining in any video call.
Why not? It's a great story. Why not? We can expect to see a bit more of Shirley, I suspect. Fantastic.
Absolutely.
Everyone's welcome. Okay, well, see, I'm interested in that because I've heard you tell your story before about how you kind of position yourselves now, and I wanted to understand the lessons learned from Lynas and what you're bringing to the table with that. So let's move into business plan, because it's a complicated space, rare earths. It's sort of loved and unloved in equal measure, and misunderstood too. So what did you learn there? And where do you sort of see yourself fitting in the current rare earth ecosystem?
I think one of the biggest lessons that we learned is with rare earths, it's very easy to overcomplicate things. And you chase the pot at the end of the rainbow, and all you end up doing is just getting yourself into a bit of a mess. And you end up with these projects which are very large, very complex, and inherently have a very high level of risk. So the major lesson that we've learned is that you can't take the approach of a traditional mining project of just make it as big as possible and then the market will come. With rare earths, you actually have to meet the market. So that means understand what volume of materials the market will accept at any particular time, and size your plant accordingly for that. The second thing is that with rare earth projects, they typically take a lot longer to actually ramp up operationally than what you expect. So you need to actually plan for that on day one, because if you don't, what you're left with is a situation where you have all of this capital tied up into a plant which isn't actually being utilized. So once again, it comes to that point of appropriately size your operation on day one, and then scale that and give yourself the flexibility to be able to move with the market as time goes on.
Right, but for the uninitiated or generalists kind of coming into this, China is a massive component of this. And you guys at Lynas when you were at Lynas, you'll have seen how much control they exert in the marketplace. So again, I'm just trying to understand the lessons learned and how that's sort of driving how you're positioning yourself today. So again, what was kind of not scaring you, but what was perturbing you about the way that the Chinese control the rare earth market?
Look, I think the biggest thing is you have to understand that you're entering a market where you're going to be a small player. You know, you're not going to control the price. So the number one thing you have to do is you have to be competitive. And that's competitive with the quality of the product and also the price which you're able to produce it at. And more than that as well, you have to be able to guarantee the security of supply. And that's where the competitiveness comes in. And that's really what the focus is for Vital, is achieving those three things.
Okay, but it's not really a case of being competitive. It's being subservient to, but allowing yourself to make margin. We saw this with a graphite company, I think, Nouveau Monde, and they said, we don't want to compete with the Chinese because they will crush us, but we need to be able to compete globally, so we're happy to just sit behind them. So that you found your niche. And this is what I mean about this positioning thing is really, really important, because I buy what you're saying about maybe trying to raise a massive amount of CapEx and taking a long time to get into production and try and work your way down the supply chain for bigger margin. But the reality is, if you can't do that without the Chinese being involved, you're going to struggle, right?
Look, potentially, but it just depends on how you actually position yourself in that market. The way that one of the big changes in rare earths is there is a push for diversified supply chains, and you've got these products which are critical to a variety of strategic uses, and also for products which are critically important for major changes in the way that we actually operate in the world around electrification, renewable energies, things like that. And as soon as you get a product which is critical in that sort of area, you'll naturally have companies seeking to diversify that supply chain and make sure and take actions so that they have the security of supply. And that means it doesn't matter what the product is and where and who controls the market. When a product is that important, naturally companies will seek to find alternate sources and to really have fallback options.
Okay, but what are you trying to produce? You're talking about producing a rare earth carbonate. So what's the market for that? What are you going to be able to make from that?
So our market is selling to rare earth separation facilities. And this is where one of the major pushes which we have in the world at the moment is around establishing rare earth supply chains. And you've got North America undertaking a real strategy at the moment to implement a rare earth supply chain, which includes separation facilities, metal manufacturing, magnet manufacturing. And you've got exactly the same thing in the EU at the moment as well, where really these pushes to establish these supply chains. Now, Europe's a little bit further advanced as they are those manufacturers there, but in each of those areas and each of those supply chains, the number one element which they require is a guaranteed supply of the feedstock to it, and that's really where we see that we have a role to play.
But what are you going to be supplying into them, and what do you know now about your ability to make a decent margin on that? So like how much demand is there? Where do you sit? How much competition? So what's it look like when we look ahead?
What it looks like as we look ahead is that demand is increasing, and it is increasing rapidly. The key focus, though, is in the first instance, you have to prove that you're actually able to produce the product and produce that product at specification. And until you actually do that, you can't even think about trying to increase your production and your volumes, because if you can't produce the product, then you're never going to sell it. So that's really what our focus is in the first instance, is proving to the market that we can produce that product at spec, and then we'll be in a position to be able to increase our production to meet the forecast demand.
Right. Okay. And again, I think that one of the problems with rare earths is it's just a big, broad descriptor for 17 elements. And here's Shirley. We'll ask Shirley what she thinks in a second. But you're supplying the carbonate. You're supplying into these separation facilities globally, whoever they are. I mean, I would love you to tell me who they are and what are they seeking from you, and does your carbonate product give that to them?
Yeah. So, and this is something with rare earths at the moment, which actually makes it a little bit easier to understand, I think, than it was 10 years ago. Currently, rare earths are driven by magnets, and it's driven by the metals which go into producing the magnets, and that is neodymium, praseodymium. So they're the magnets used in electric vehicles, wind turbines, anything to do with miniaturization, robotization, artificial intelligence, those types of things. So those are the elements which we're producing, and our carbonate product has a very high proportion of those which is able to go into that supply chain.
Right. Okay. And again, where are you? You're about to go into Nechalacho. You've mobilized the team. You're going to be getting into production. And what are you walking up there with? Have you got offtake agreements? Because I get the low CapEx component, which is great. Makes it easy to kick things off, and we'll talk about how you grow that. But where are these offtake agreements? Who are your partners? What have they been testing?
So we've signed a definitive offtake agreement with a Norwegian company called Retec. So Retec, I first met the guys at Retec back in 2009, and so we've been building that relationship for the last 10, 11 years. They've been operating a pilot plant up in Norway for almost 10 years now, and ready to commercialize that technology. So the agreement we have with them is starting off at 1,000 tonne a year of rare earths, which is excluding cerium. Of that, approximately half of that material will be the magnet rare earths.
What's Shirley doing? We need to know.
Looks like she's about to throw up on me, to tell you the truth.
We got a verbal action. Excellent.
Yeah.
It's live on screen. Yeah, I think there's half investment, half nature documentary, which is we're all about learning here. It's good.
Yes.
That's good.
Welcome to my world.
So let's talk about. So you're producing a rare earth concentrate in Canada, exporting it over to Europe for them to kind of process. So what does that relationship look like? I mean, who's making the money here?
So we're operating more it is a partnership model.
Is it 100% offtake?
It's not 100% of our offtake. We certainly have the option there for secondary offtake partners. And now that we've signed Retec to be our cornerstone customer, we can now progress those other discussions. But we certainly see Retec as being, as I say, our cornerstone customer for moving forward. We believe that they have a real one of their strengths is the potential to grow and expand their business. And the relationship we have with them is, and the nature of our agreement is one which we're looking forward to going down that journey together.
Right. So talk to me about the numbers. Like I said, August, 25 million market cap. Today, 180 million market cap. The market's expecting great things from you. So how do you deliver on that financially? Can you talk us through like the low CapEx numbers, set projected sales, the timing of all of the above?
Yeah. So from our perspective, our focus from day one has been on achieving the lowest possible cost. So our target has always been around about the $20 million Australian mark for total construction costs, which is that's a factor less than the normal plans for rare earth projects, and that's really critical for funding and more importantly for speed of getting into operations. So because we have such a low CapEx, that is then enabling us to mobilise our mining fleet this year and looking at first feed into the kiln by the end of the year.
Right. And how much money have you spent to date getting here?
We've spent around about 20 million.
Right. And how much have you raised in total?
When Vital took over the private company which did the original deal, which was Cheetah Resources, there was 15 million, and then we've since from that we've since spent another 4 million.
Right. And have you put out to the market what you're projecting or hoping to achieve, and some line of sight for the next 5 years or so?
No, we haven't put out the full projections there. One of the lessons that we've learned is that you have to actually meet the market, and so our plans are to actually have a plant which is able to react to the market conditions and to build in the flexibility to be able to actually grow according to those market demands.
Right.
So we don't have a fixed. We will be 1,000 tonnes, 2,000 tonne, etc., moving year by year. Our focus is really in getting our plant built, having the capacity to supply Retech with their offtake, and then building the capacity of that plant as demand grows.
Right, and so we see similar models in mining, right, where they want to start off small, get some revenue going, which funds the next stage of growth, and et cetera, and then you build up over time. What are your plans? How are you going to grow? Because you've got to deliver a growth story into the marketplace.
Absolutely. So Nechalacho itself, while we're starting at this level, Nechalacho is actually a massive project. I mean, we have well over 1 million tonne of contained rare earths in that project. That's enough that's a generational asset. So we have as much capacity to expand our operation as the market demands. The real challenge for us is to get ourselves into the position to be able to take advantage of that. And that's the process which we're going through today, but always with the eye of how we're going to expand that in the future. To that end, I mean, at the moment, we're currently undertaking a drilling program on one of the larger areas there to define with the plan being the target being to define a mine plan for that future operation, so that we can start the process of getting that into development as well.
Right. Now, notice that you're looking for a specific type of ore, because you're talking about using ore sorters as part of the solution, and again, to keep the costs down. So you're looking for larger sizes of rock or soil. So do you eventually then go back and recycle what has been sorted out before? Prima donna, that one.
Yeah.
Yeah. So for anyone listening on podcast, there's a cat wandering back and forward in front of Geoff's face. So that's what's happening and why I'm laughing, because it's quite amusing. Because the podcast people can't quite see what's going on. A delightful white Siamese. Are we going Siamese? What is it?
Ragdoll.
Ragdoll. Very, very pretty.
Yes.
Very fluffy.
Ragdoll, who thinks that she's listened to enough of these presentations that she knows how to join in and add value.
Well, she is. Anyway, back to the question which is again, because it just comes to the model is right. We will get cash flowing. We're going to use all sort of technology. We're going to start small and we're going to build up cash flows. But then you're sitting with a big bunch of tailings, which you can come back to at some later point, or that's gone?
No, look. One of the beauties of ore sorting is, for one thing, we don't actually end up with tailings. All we end up with is a bit of crushed quartz. So that rock coming out of the ore sorter, the non-mineralized material, we can use that on roads and things like that. So that's one of the great things there. Any undersized material, we will feed that through a gravity circuit, so like a dense media separation, to upgrade that before processing it. So no, look, it will be a very low. There's not going to be any waste coming off the operation. Very low impact. Anything which comes out, we'll be able to use around the site on things like roads, airstrip, things like that.
Right. Okay.
Particularly at that startup operation.
Right. Okay. And what is it that you're after? I mean, again, just for generalists, there's light earths and there are heavy rare earths. Light rare earths and heavy rare earths. What are you chasing?
For us, it's really it's all the magnet materials. So our focus, naturally, our deposit is a light rare earth deposit. We do have some heavies, but it is all about the magnet materials. So it's about that neodymium and the praseodymium. They're the elements which make or break these projects.
Right. Okay. And we see a lot of talk in the market. So it's going to be a bit macro here, but there's a lot of talk from the rare earth companies that we speak to about their ability to supply into the same market, magnets for automotive, for OEMs, and there is a heavy reliance on this Chinese factor, to get the funding. So they talk about sitting outside the Chinese ecosystem, but then go running to it for capitals, which kind of puts them firmly at the door of the Chinese ecosystem. So do you see this kind of bifurcated market in a sense that with, US ecosystems, European ecosystems, Asia, Chinese ecosystems happening, that where you're going to be able to sit, where you comfortably insert yourself?
Yeah. So look, our focus has always been from a sales side of things, we're looking at outside of China for our customers, and likewise for our investors as well. We see that we have a unique opportunity having a North American resource, North American process facilities, and naturally that opens up the possibility from an investment side of things, particularly when you look at what's happening over in the US and Canada at the moment. But really positioning ourselves as being a supplier outside of China, I think is certainly a strategic advantage in the current climate.
So why have you only got one partner at the moment? Given you're so close to production, what are you waiting for, or what's the market not believing in terms of the sorts of people that you should be speaking to?
The key things which we were looking for is we wanted the right partner, and I think that's critical to the success of the project. First of all, we wanted the right partner, and I firmly believe that we have found that. 4 or 5 years ago when I started this journey, I sat down and said, okay, what customers would I like to get? And Retech was absolutely top of the pile there. Now that we've got them signed up, and that was critical as well for us to finalize our flow sheet and our product spec. Now that we've got that, we can now look at secondary sources and secondary customers. Part of the other challenge, of course, is that when you look at the market outside of China, at the moment for separation facilities, you basically have Lynas operating a separation plant, you have Silmet operating a separation plant, and everyone else is in that startup phase. And so naturally it's a bit of a chicken and egg situation. You want to sell into that market, but you also have to wait for that market and for those customers to actually develop their plants. So you can't just build a massive plant and say, well, we'll sell it outside of China, we'll sell it into the US market, because at the moment we just don't have the facilities there. So it is a case of, for those operators, before they can say, we will build this plant, they need the guarantee of supply, and they need somebody there who is actually producing a mixed rare earth carbonate, which they are able to buy. Once they get that, they can then build their plant. Likewise, so that's where, from our perspective, we don't want to go too big too early, because you'd just be left with this plant with a lot of material looking to sell, and a lot of capital tied up in that operation.
But isn't that part of the problem? The fact that it's so small. Not only do these OEMs and battery manufacturers, they want consistency of the material. They want consistency of volume of supply too, and you can't guarantee them that with the way you're starting up. You're entirely, seems to me, focused on reducing the amount of dilution for your shareholders, which is totally admirable. But wouldn't they forgive you if you could say, well, look, we need a growth component here. So every dollar of yours will be invested for growth. We are going to insert ourselves into this big ecosystem in North America, Europe, wherever. It's going to be okay. Why such a focus on the dilution component? Because it's not everything.
No, but the actual focus is more around getting customer acceptance. And that's the critical aspect first. You can't grow, you can't build a big plant until you have the acceptance of the customer. And the challenge is actually the best way to actually achieve that. So that's really what we're focused on in this first instance. There's the added benefit that it reduces shareholder dilution, but in a lot of ways, that's actually a byproduct of the strategy. So you achieve customer acceptance. Once you get that acceptance, at that point in time, you can then build your operation to that larger scale to provide them that long-term supply of material. But because rare earths are so specialized, until you are accepted, you won't sell those volumes of product. So that's the challenge.
It's kind of interesting to me because it seems like you've kind of reframed an existing and accepted process of people, building pilot plants, yep, producing stuff, getting it tested by a variety of potential off-takers before you then go and build your larger plant. I mean, haven't you just reframed that? Because you're getting into production, but it's at the levels that a pilot plant might produce. To
an extent, where it's certainly bigger than a pilot plant, and it's actually a plant which actually makes money. So that's the critical aspect. And the other thing is, it actually a typical pilot plant, you might get a ton of material to a customer, and they can do a single run, see how you go, and then you have to build your big operation. Now, once you do that big operation, you still have to prove that big operation is producing product to the right specifications. So you still have to go through another acceptance process. All we're doing is we're actually combining the two together. So in our first instance, it's part pilot plant, part commercial operation, which means that we get to provide our customers an ongoing supply of product, which is of a suitable volume to enable them to test the product, test that it's all at specification, working appropriately, and then for us we can then scale that up, and we can scale that up very quickly. Now, if we were to build a pilot plant, traditional pilot plant, get that accepted, customer says, yes, we want it. Okay, we'll build a big plant. There's 3-4 years delay. Whereas from our perspective, it's in that point of saying, okay, here's our product. You want more? Great. We'll ramp this up year by year. And so we actually reduce our time frame significantly to achieve that large volume.
Okay, so it's modular in that context, in the sense that you can ramp it up without delays. Okay, it's interesting. It's interesting. I wonder why more people don't do it.
Yeah, look, it is a very different approach, without a doubt, and it is an approach which can't be applied to every project, and it's not suitable for every company. But we believe that for our project, it's the appropriate way to go. And from the risk profile, we believe it offers the lowest risk to our shareholders for the highest rewards.
Right. So apart from Retech, the Norwegians, how many more conversations are being happening? How many more companies are going to be testing in the next 12 months?
Look, we would be hoping that minimum 2 to maximum 4.
Right. At the same sorts of levels of testing.
Look, we'll see where we go with the volumes. We'd always see Retech as our major customer, but as we expand and increase the production, then there's certainly going to be the scope for other customers to come in. Right.
Do you think that the market's got just a little bit too excited? You must be stunned by the response since August.
Look, I don't think so. I think if you look at the comparison with other rare earth explorers, then I think it's more a bit of a re-rate rather than than anything else. So, look, obviously happy with the share price movement, but I would certainly hope that there's certainly more room for improvement to go.
And do you think the market as a whole, and there's obviously a better understanding of what rare earths is, there's a lot of new entrants, I suspect, that will be coming into this space. What do they need to know to be able to compete?
Look, I think the biggest thing is rare earths aren't a commodity. You can't just come in and say, great, we're going to build this operation. It's easy. It's the next hot thing and we'll make a success of it. You really have to understand the business. You also have to understand the technology which goes into actually operating one of these plants. For us, we've got a team. If you look at our operational team, 6-7 people, they've all had experience with rare earths. They've all got scars and have these lessons that they've learnt. Coming into it fresh without that experience, it's a tough gig. And it's the reason why not a lot of these projects have been developed, and certainly haven't been developed successfully.
Well, yeah, I think you'd say to investors, if they do look at some of these new entrants coming in, rare earths, look at the management team's track record and experience, number one.
Absolutely. That's the number one thing. Nothing beats experience.
Brilliant. Geoff, appreciate your time. And Shirley, thank you very much. What a great story. We will stay in touch with you, because it'll be interesting to see how things progress. Sounds like there's a lot kind of happening this year. Thank you for your time today.
Thank you very much. And Shirley, thanks you as well.